October met expectations as a downturn for the markets, with major global indices ending the month in negative territory after a volatile stretch. Looking ahead, will November bring the anticipated rebound? Let's discuss. My name is Den Slim, celebrating Halloween here in Austin, Texas, and eventually the US elections. Welcome to another episode of Monday Market Outlook. So the PSEi broke its 3-month win streak as October closed in the red, pushing the index right into our first support zone here at 7140. The index broke the more immediate support at 7274, confirming the breakdown of this head and shoulders pattern as the market entered into the long weekend. Last Thursday saw net foreign selling on index heavyweights led by ICT, Ali, BDO, TEL, and SM. The recent market weakness is mainly brought about by the aggressive widening of the yield spread between the Philippine 10-year and the US 10-year yields, resulting into a significant outflow of foreign funds from PH markets. And with the US 10-year yields further spiking to 4.35 last Friday, this could mean further downside for the PH markets this week. In the meantime, as the foreign outflows intensified last week, the peso continues to weaken for most of last week, closing at 58.40. So let's look at some of the earnings results that came in. AP with modest Q3 results, up 2% year-on-year, but overall they are already at 89% of full-year targets. Q3 alone was up 13%. RRHI also good earnings, 202% year-on-year. Less one-off income, core income rose by 20%. Q3 earnings is up 30% to 1.4 billion. AEV also coming in with better than expected numbers, plus 9% year-on-year, 20% in Q3 alone. SEC, as expected, a negative 31 year-on-year core income growth rate, but this was actually above expectations. East West Bank also doing quite well. Meralco just in line with expectations. Metrobank also was below expectations and is currently only 75% of their full year target. So let's look at the PSEi charts. The index closed the week at 7142 after breaking down from a head and shoulders pattern. Now, if this breakdown holds with the head and shoulders pattern here, the measured target aligns with the second support level at around 6,996 to 6,960. However, we see a confluence of support in this area. This level previously acted as a strong resistance with notable challenges to break through early in the year and again in September. So we also have the 0.5 Fibonacci level here, the trend line support, and the 100 EMA and the measured targets all clustered around this zone. So this could be where the bulls eventually come in and help push the markets up. This week, keep an eye on whether the PSEi can maintain support at this level. However, with the 10-year yields surging to 4.38 last Friday, selling pressure will most likely continue this week. Now, if we look at the 1-hour charts, any bounce from the current levels will likely encounter selling pressure, and a rally could meet resistance here at 7,240, leading into a potential rejection and setting up a dead cat bounce that may eventually break down to 7,000. So exercise caution with your trades this week. It may not be an ideal time for swing trades, but for long-term investors, this could be a good time to accumulate stocks that can offer some value. Hopefully, if you took some profits in recent weeks, you have cash available to buy the dip in the coming weeks. Now, some names that I'm looking at, SM and AC, of course, if we are expecting weakness in the index, it looks like both of these stocks may have some further downside to go. I'm looking at 930 and 900 for SM. For AC, I am looking at around 630 and possibly 635. but this is kind of a stretch. DMC already gapping down after its dividend X date in October 29. This could be a good buy the dip opportunity. DMC still offering around 12% trailing 12-month dividend, but I would prefer SCC at this point. SCC also gapping down after the dividend X date on October 28. This is a good zone to buy SCC. Currently, it gives around 10% dividend rate. Compared to DMC though, with the recent purchase of Cemex and the losses that DMC might absorb, this could cut into the dividend payout for DMC. So SCC right now looking like the better choice. Looking at the real estate stocks, we have Ali with further downside to 32 pesos. We've been waiting for this zone. SMPH not looking good, but it did bounce off of the 30 peso level. It could consolidate along this area in the next few weeks. For the banks, BDO already breaking down into the trend line support here. If this double top formation breaks down, then we could expect a measured target of around 143 support. I would reduce my positions on the banking stocks. BPI also has reached our target price level. I already took profits last week, so you can also take profits along this area. Metrobank also could be a choppy week for banks. We also have ICT breaking down to 396 right into the bottom part of this trading band. If it breaks down further, we could look at 373 for a potential buy. Monde looks like a good area to buy into the dip, but of course with the market weakness, be cautious. This might result into further weakness, but this was a good bounce off of the 20-day EMA last Tuesday. Manila Water could be a good buy the dip opportunity for long-term investors. It has managed to bounce off of the 25.50 support zone. Hopefully it continues to rally up to 28, but we'll see. Finally, TEL, it's back into the 1,430 zone where it was before. This could be a triple bottom, or if it breaks down further, we can look at 1,345 as the next level of support. PLDT at this point yielding a 6.5% dividend yield. Could be a good time to accumulate on PLDT at this point. So, on to the global markets. Last week, US economic numbers were messy. There were less job openings, but jobless claims also came in lower than expected. Core PCE numbers were in line with expectations, but personal spending ticking up, which may indicate inflation pressures in the future. Non-farm payrolls last Friday's surprise with what I even thought was a typo, as only 12,000 jobs were added last September from the 113,000 expectations. But the picture the data paints of the labor market is actually muddled by the fallout from the hurricanes and the Boeing strikes, making the results questionable on what it will mean for the path of interest rates. Currently, the market's pricing in a 99% odds of a rate cut at the Fed meeting this week on Friday. Meanwhile, the US presidential elections are also up this week, and while the polling averages show both candidates almost on equal footing, the betting markets disagree, as we have Trump upping his lead to 67%. But the US elections already priced in for the market, and last week was really mainly driven by the earnings results from the Mag 5 stocks. Alphabet reported last Tuesday and Amazon later in the week, pushing markets up as they easily beat expectations. Cloud revenues very healthy, up 35%. Cloud AWS revenue up 19% year on year. The revenues on the AI business drove the stock up significantly after the earnings report. In contrast, Meta and Microsoft earnings pushed the markets down also on AI, but on spending concerns. Both companies announced significant spends on their AI infrastructure, potentially affecting margins moving forward. Apple, meanwhile, reported tepid results. The launch of the iPhone 16 did provide some revenue growth, but concerns for future growth, particularly in the China markets, remained iffy. As a result, the S&P 500 broke its 5-month win streak last Thursday as the last trading day in October ended in the red. Let's look at the S&P 500 charts. The index faced selling pressure and dropped to the heavily traded zone around the 5,000 area following the Meta and Microsoft earnings reports. As anticipated, seasonal uncertainty around the US election often triggers this kind of a pullback, which could persist into election week. The market has so far declined 2.9% from its peak, and it would be surprising if the S&P 500 drops further to around the 5,620 level in the coming weeks. Amazon earnings last Friday gave the markets a boost, with the S&P 500 briefly rallying to 5,780 before settling at 5,736, even as it shrugged off a messy jobs report. Now, if we look at the weekly charts, there may still be room for downsides as the markets typically dip into the 20-week EMA, and this would actually represent a 4.5 dip from the peak, which is normal after a 6-week rally. Look at how the S&P 500 has managed to touch the 20-week EMA after a strong run up. Currently, the S&P 500 is on its second consecutive week of losses after a 6-week win streak. Now, looking at historical trends, it is notable that after the S&P 500 experiences a 6-week win streak, the following week often shows a decline and averaging around 0.7%. Currently, we are down 2.5%, which aligns with the trend as markets are only positive 36% of the time after an initial down week. Statistics suggest that we may see 4 more weeks of weakness, but on a 52-week horizon, the market typically rebounds, showing a positive return 86% of the time with an average gain of 10%. So with all the talk of the rising US 10-year yields, let's also look at some seasonal charts 50 days after the first rate cut. 2024 numbers so far tracking closely with the 1995 and the 1998 scenarios. If we are to track this further, we could eventually see yields come back soon, which would be good for local markets. But currently, we still have some further ways to go before that happens. Now, with October finally over, we are now actually entering into the best 6-month period of the year, which is the November to April timeframe. A 77% chance that the markets end higher by an average of 7.1% in the next 6 months. So something to look forward to until 2025. Meanwhile, Bitcoin continues to surge. Currently, Bitcoin is around 69,500 after reaching a peak of around 73,000. Could it go up any higher? Perhaps the election could also bring in some good news on Bitcoin, irregardless of who wins, as historically we do tend to see Bitcoin prices surge significantly post-election years. Now, as you can see, each cycle does give less returns over time, so don't expect the same massive returns we've experienced in the past, especially as Bitcoin has entered into maturity over the past years, especially with the involvement of big hedge funds and ETFs. So the next 12 months for Bitcoin could be very bullish. Now, it will be a busy economic week for the Philippines as we will get the S&P manufacturing data on Monday, followed by the inflation print on Tuesday. Meanwhile, unemployment rate and the GDP growth rate will be announced on Thursday. Earnings in the US will continue this week but may not affect the markets too much, though we will get some heavy volatility with implied movements of up to plus or minus 18%. So that's it for this week. Remember, be cautious. The markets are experiencing its seasonal weakness at the start of November. This may not be a good time to go all in yet. Now wait for the 7,000 level to get into some of your favorite stocks. So That's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.